and welcome to the Killik & Co podcast for the 12th of August. This morning we've had the second quarter GDP number from Japan. The number came in at 0.6%, which was lighter than expectations and has caused a small fall in the Japanese stock market, taking the index down to a 6-week low, back down to the region of 13,500. It had rallied back up to about 14,800, so a fairly decent retracement back from that sort of second peak that we saw, as I say, towards the sort of back end of or mid-July. So Japan is sort of an early feature. In terms of the look to the week ahead, historically mid-August perceived to be reasonably quiet, but in terms of some of the news flow, Europe will take centre stage with some sort of first takes on GDP numbers coming out from Europe, and the indication is that these numbers may indicate parts of Europe coming out of recession, the longest recession that has been recorded in history throughout Europe, so potentially some positive news coming out of Euroland. In terms of the UK, we will have inflation data. Last week, as we know, that the Bank of England, during their quarterly inflation report, issued some new guidance, forward guidance, much as expected, focusing on levels of unemployment, but with caveats, and caveats being somewhat to do with the inflation target. The number this week could possibly have a 3% handle on the number, and that remains well ahead of the Bank of England target. And whilst the Bank of England's considered view at the moment is that inflation will return back to target in the foreseeable distance, if that view were to change, then that is one of the caveats for raising interest rates. We have heard this morning from Goldman Sachs, however, that the UK recovery is strengthening, and as a result they're upgrading forecasts for this year up to 1.4% and taking it up to 2.3% for 2014. They have pushed back the date when they expect interest rates to rise, though, from the end of 2015 to the second quarter of 2016. So we'll take a look at some charts which were influenced by some of those decisions and some of the stocks that are moving in these, as I say, quieter summer weeks. First of all, a look at the week ahead. Just in terms of some of the stocks, it is becoming thinner on the corporate report season. We've just had results out from Prudential. The headline numbers look favourable. The key number from Prudential is the dividend, and they have upped the dividend at the half-one stage, up by about 15.8%. So that looks slightly ahead of the best forecast for Prudential. The shares are just toying with the £12 level, which is the high for Prudential at this stage of the year. Looking ahead, those that are underlined here are the ones that we'll be focusing on with some research notes, particularly interested on Wednesday from Glencore Xstrata. This is an opportunity for the company to talk about those sort of early stages of merging this 100 billion sterling company, which was the old Xstrata mining business from the Glencore trading side. They have slashed capital expenditure at Xstrata, along with many other mining companies that have cut back by around 20% to their capex programs at the moment. So we need to make sure that we keep an eye on some of those suppliers to the industry of mining as these capex cuts continue to impact on that industry. Caterpillar were warning about that during their Q2 results. So Glencore Xstrata later this week. Also, we have Imperial Tobacco. These shares are sitting at the moment in terms of relative strength towards the low end of the relative strength indicators. The shares have been retracing back from over £23 to £21.50. There have been concerns about European demand for Imperial Tobacco and also the impact of e-cigarettes on the tobacco industry. So it has been a sector that has begun to underperform in the second quarter of the market. So turning to some stocks that were moving last week. The first is Aviva. This is again a one-year chart showing you that under the new chief executive, things are starting to gain some traction within Aviva. It was a perennial underperformer, and they have spent much of 2012 and early 2013 cutting back on many business lines, selling off businesses, starting to get the balance sheet into better strength, and as a result of that, we have seen some progress on the stock price. And last week's results also showed that they were seeing signs on net sales. They were improving, so it was a better picture for Aviva last week. In terms of terms of some stocks within the airline industry, I have noted some big upgrades coming through for the aviation industry, being led somewhat by international airlines, the British Airways Iberia merger. That stock is up around 70% year to date. We also have Boeing, suppliers into the industry, which have been moving quite well of late. Back to the insurance sector, one stock that disappointed last week was Esure. Came to the market at 290. Stock traded up briefly above 320, 325, but last week's results disappointed many. Whilst the numbers were broadly in line, it did demonstrate some slowdown and some competitive tension within the motor insurance world, which is impacting on the forward guidance for Esure at the moment, and some concerns over some of the ancillary sales that they do sell or upsell to potential clients coming under some pressure. So the stock had a poor week last week, closing well below that placing price. Again, we will have a note on that stock as an update. In terms of currencies, the pound put on a very good week. It is strengthening on the back of a strengthening UK recovery at the moment. Some felt that last week's forward guidance had many caveats to it, more than they were expecting, and as a result of that, the potential for a strengthening or hardening of economic policy was the sort of first reaction out of last week's forward guidance. That sort of sits slightly in contrast to what we mentioned earlier with Goldman Sachs pushing out the interest rate decision back to, say, mid-2016. But nevertheless, there was some hardening in the currency last week and taking the pound back up to 154. In terms of other stocks from last week, we mentioned in our previous podcast how we were looking forward to guidance for InterContinental Hotels Group. We do have a note covering those the results that came out, but broadly they came in line with expectations. The US economy certainly seems to have some pricing power, and there's a lack of new rooms coming on stream, and as demand picks up, it does feel as if there is some pricing power, as I say, coming back into the US Hotels Group at the moment. Having completed a buyback programme, they've announced a new buyback programme of around 350 million, and that was enough to take the shares temporarily up to £20. It has retraced a little bit since that period, but nevertheless it remains a stock that is very firmly towards the uptrend at the moment. Quick glance at the Japanese stock market, which we mentioned has retraced from 14.8 back down to 13.5 level, and as I say, it's back to a 6-week low there at the moment. And as I say, the final chart is the Prudential. These results just out on the screen at the moment, and that £12 level looks like it's going to be tested once again to the upside. The results demonstrating that dividend growth still remains very favourable with investors in this low interest rate environment.